For traders that have emailed and asked, the links for the free downloads are in the description box below. Just click on the link or copy and paste and put that in your browser. The 4-step method to high performance trading and the 7-step daily routine for high performance traders create the rituals, the mindset, and the winning attitude to master the markets. Bulletproof yourself with your daily routine and your habits. Force yourself to be getting better, 1% better every single day. How good can you get, traders? Again, the free downloads, the links are down below. They're both free courses. Let's get started. Good day, traders. Stacey Burke from Stacey Burke Trading. A short video today on reviewing the process. High of day, low of day, timing, the timing window, 15-minute rotations at the high and low of the day, and then front side and back side. We talked about this last week, understanding what your best trade setups are. And we'll just type this in here. Coming back to some really basic concepts, and that is the high and low of the day. So we had a day one reversal inside on day one. So for simplicity's sake, we're going to just stick with the basic understanding that Monday is day one. Now, some traders messaged me and asked me about how long do you wait around, all that sort of thing. When you have an inside opportunity, again, just high of session, low of session, it was an inside reversal. We've talked about these before, the creeping trend into the low and then the reversal back inside. Inside, we're looking for 3 peaks, but this is clearly an inside reversal, higher highs, higher lows. That's different than a 3 peaks inside day like we saw on Friday. And then understanding and recognizing that when the session's open, what are they going to do? We know what they're going to do. They're going to go to the high or the low. And we don't work until they get to the high or the low. And if you're going to work before you get into the high and the low, take the explosive trade with trend on the front side of this move. Front side, back side. Remember, we talked about not counter trending until the market has given us that backside, and now this is a 15-minute chart. But today we're going to look at day two. We're inside. Gold has not triggered a previous day's high or low, but we have a high of London and a low of London. And all I look for is the timing window. First hour puts in a high and a low. Second hour may revisit that extreme for a move back to the opposite side. Now, gold wasn't the cleanest of the charts, but I'll just review that for the simplicity of the example. So first hour goes up and makes a high of a day and breaks structure. It goes up, gives our Batman formation, and lower high, lower low. Now, this is all prior to the New York Open. So first hour again has a low in place before they begin the pump up. This creeping trend into the high, peak formations, breakdown in structure, and then we get our open into the New York Open, pumping up into the peak formation high. Now, this is where I want traders to understand the time compression. So there's really a couple of main things I focus on, and that is the end of a 15-minute bar. 15-minute bar, I've talked about this. Again, it's all about making things simple. So mixing a whole bunch of variables and data and information into your equation to trying to develop a thesis is great if you're establishing positions over a lengthy period of time, perhaps. But when you're coming to a session and you're looking for 25 to 50 pips or more, it requires you to understand what's happening on the day in that template. The rest of that gobbledygook may play out over the longer time frame, but when I come to the screen, I'm looking for high of day, low of day opportunities. They're going to move the market. Depending on the template that we're in, they may make it just a 25 pip, 50 pip move. Now, again, talking about time compression, New York equity market opens. If you want to review the timing window, just put timing into the search on my YouTube channel. There's tons of videos. We reviewed the timing window ad nauseum. So again, New York equity markets open at 9:30 New York time. They work the high, 15 minutes to the high, the very last minute of that 15-minute candle, pin hammer to the high at 50 after the high is locked in. Stop can be placed anywhere. It can be put above the pin hammer. It doesn't matter, because the thesis is that this market is going down a minimum to where the pump and dump began. You can make it as complicated as you want, but this is a textbook pump and dump, head and shoulders, whatever you want to call it. And so when this market is going to go, it's going to go. Now we get the first level dropping and it pulls back, clears out again and pumps up to roll over and retest the low. Still may head towards yesterday's low of the day. Doesn't matter. Point being, it's a 1-bar stop. It's a session scalp. You can get in, you can get in again. You can recycle your profits and get in again. The thesis is front side. The front side of the move is over. We're on the back side now, and we're into the equity session. The market breaks structure, pushes back up for 15 minutes at 50 into the high of the day for a move back down to the low of the day. Now, this is a textbook short squeeze setup on the Canadian dollar. We have our inside day on Friday, reversal inside on Monday, creeping trend all the way down. And I've talked about these types of days often. Day 1, day 2 can become a precursor for an order flow day. Creeping trend down, 3 sessions of drop. We're on the front side of the move on the 15-minute chart. Front side meaning that this market is currently in a downtrend. Blows off through Monday's low before reversing in the Europe-London window and making higher highs, higher lows. That's a break in structure. We took out the high of the day. This break in structure now sets us up for a short squeeze. Zooming in, we can go back to our really basic approach. There's the high, and there's the low. Now, here's the thing. We talked about this in previous videos. When they drop it down, I'm thinking V bottom. They dropped it down heading into the session. That's the V bottom setup. We had no middle structure until they pulled back in that first hour. First hour ends, the second hour engulfs, and then 1, 2 down into the New York Open. So again, just looking at our 15-minute chart, I want you to think about the timing of all this. Right at the New York Open, they take the traders down into the peak formation low. Now, think about what I just said about time compression, the ends of 15-minute candles. They pin down into the peak formation low at the New York equity market open. False move, session beginning. False move, session beginning for 15 minutes. They bring the market up and break structure on the inside and then proceed to auction down into the open of the New York session. For how long? 15 minutes into our peak formation low. This pin hammer is the very last minute of the first 15 minutes of the New York equity market open. So again, understanding time, all these things about all these other variables and everything else, if you watch the clock and understand when a 15-minute bar is closing and you have a setup on your charts and a thesis based on the larger template, day 1, day 2, short squeeze setup, down into the New York equity market open. Again, traders are it's very similar. You can review these on your own charts. Triggering previous day's low, break a structure on the inside, auctioning down back into the peak formation low of the London session, pulling back, 1 push, 2 push, New York equity market open, 15 minutes, bear pin into the low of the day. Again, the very last minute of that 15-minute New York open is a pin hammer after the engulfment at the peak formation low. So you can almost, in some cases, when you understand the thesis and the template, be looking to just pay attention to the clock. 15 minutes, false move into the low of the day, engulfment, pin hammer, very last minute of the first 15 minutes. My thesis is that the next 15 minutes is going to rocket up on traders that are shorting that into the low at the open of the session, lower level shorts. Again, an explosive move. First target will be the high of the session. Again, no stress trade, 1 bar stop. If you are unsure of where to get in, pay attention to your clock. Again, we have a high and a low. We're looking at the euro. Again, the process stays the same for everything that I do. We have a low of the day and we have a high of the day when our 12 candle window opens. The market immediately trades up into the high of the day. Now, there are traders who may have been long trading with the trend back up to the high of the day. And again, as we've always said, you can trade in both directions. Depends what your expertise is and what the setup is. So again, we have a front side move starting on the euro, so traders may have again taken a long position. Now, I want you to look at the very last candle of the first 15 minutes. We have 8:14 closing. They've put a low in place and broken structure on the inside. They auction down into that low, second 15-minute candle, and give a spring squeeze for the re-entry of the long trade with the trend. With the trend, the underlying trend is up, back targeting obviously the high of the day. Now, for traders who weren't long and they've come to the screen and they're looking for an opportunity at the high of the day, we get our New York Open and they go to the high of the day and engulf the high. The very last candle of the New York Open 15-minute candle is our bear pin hammer at underneath the high of the day. So again, you've heard me say this before. Once I have confirmation, I'm getting in. My entry is going to be, ideally best fill that I can get. Sometimes I'll look to trade the collapse, the engulfment, but let's say we take our bear pin hammer. It's always going to be a max stop on that last engulfment candle. High of the day, it's all the same. You're looking at 10, 12, 15 pips, but again, understanding that we have this ramped up volume into the high of the day. That's our pump. New York Open, pump for 15 minutes. The very last minute of the New York Open gives a nice 35, 40 pip trade back to the low of the session. So again, trend traders may have been looking to go long, and again, the timing window, second 15-minute bar, resumes the trend. First 15 minutes to the high of the day on the New York Open, the very last 1-minute candle, the high of the day is locked in, our micro M engulfment pin hammer last 15-minute bar. So my thesis is always that the next 15-minute bar is going to move. No news on the schedule. Some traders emailed me and they looked to trade the pound. So again, just looking at the pound, this is where timing comes in because we've got a broken down market. What we mean by that is that the pound broke through the low of the Asian session, in London, and then proceeded to auction back up into that breakout, which again is inside of the peak formation made in the London session. So again, establishing our levels and our timing window. We have our first hour auctioning up, triggering the breakout area from the Asian session and breaking structure on the inside. So again, reviewing the fact that we have front side, back side. We're in the back side of the move now. We've broken structure on the inside. New York opens, and our last candle of the 15-minute structure gives us our bear pin hammer after the engulfment and 15 minutes auctioning up into the high of the day. So again, just reviewing the process. Peak formations are up. We've pumped up. Peak formation high. New York Open, they auction back up. Engulfment, very last minute of the candle. Some traders may have proceeded to get in after the engulfment and pull back prior to that last minute. I'm just demonstrating the importance of understanding time compression. So obviously the engulfment was an opportunity, but the thesis may have been that this was going to go all the way back down. First area that could fail is obviously the low of the session. That's our neckline. This seems to be holding somewhat this late in the session, but again, an easy 25 pips. They came right back up. Bit of a messier chart. Not to say this is a best trade setup, but no news. Peak formation high for the stop hunt back into higher level longs. NASDAQ, again, just have my high and my low. That's as simple as things get. Once they break the low, we're then targeting the New York equity market open. They break the high of the day in the first hour. They put a new high in place. So again, I just draw my levels when the equity market opens. We get a first bar opportunity 3 minutes into the New York session. So that's our first mouse. There's some traders who messaged me and said, was it okay to take that first mouse? Now, this is where I talk about potentially taking a starter. We had a break in structure, and our front side of the move potentially may now be locking the high in place. The auction process takes this 25 down to the major quarter level, 250 pip level, and the end of the hour. So again, coming back, if you're short right off the bat, you're in the money, but the new hour starts and they pump this back up into lower level shorts. And again, I look at the same process, the end of the 15-minute candle. So I cannot emphasize enough about paying attention to the clock. You can look at all these other variables and statistics and commitments of traders and interest, open interest, and interest rates, central bank thesis, all these things. I'm not saying there's anything wrong with that, but when I come to the screen for a session trade, I'm looking for setups. That's it, and then I'm locking it in, and I need to emphasize getting off the screen. So we have our starter. We have the end of our first 15-minute candle, very last minute. So again, we'll mark this off so traders can see this candle locks in our lower high inside. They pull it back and break down again. So we get a breakout on a strong candle, meaning we don't want to chase the large candles. They pull back and engulf and give us our nice little pop-up peak formation inside. The new hour starts in the very last candle of our first 15 minutes, starts with a new pin hammer to continue the move down. Back in line front side, now we're on the back side. So again, the same process applies if you're going to be looking for something at the low of the day. We're just starting to break that trend. Could retest the low, no idea, but front side, back side, timing is everything. So again, I'll just have my 1 minute chart. These are 250 pip boxes. Your numbers may be slightly different, but again, it's the process. There's the high of the day. Market comes up in the first hour and puts a new high of the day in place. So our thesis is that when New York opens, we want to see them come back up to the high of the day, and the same process applies. We're on the front side of the move. New York, just prior to the New York equity market open, they break structure and retest that and auction down with a creeping trend to pump back up in the new hour. And again, the very first bar, last bar, whatever you want to look at, the pin hammer as we start our new 15-minute cycle in a broken down market after the pump up and our peak formation high into major round numbers gives us our short trade with a stop to manage our risk at the high of that peak formation. Thesis being a minimum of the low of the session where that move started, major quarter levels, but we could also target a measured move, which are just 100 pip expansions of that high-low range. This is not Fibonacci or anything else. It's just plain old 100% expansions of range. So again, front side of the move, break structure, first hour, New York equity market opens, pumps up to the high of the day, locks it in. Auctions down for 15 minutes in a creeping trend. We get a pop-up. That third hour starts back up to 50. Pin hammer at the end of the 15-minute bar for a short trade back down through towards the low of the day. Keep it simple, traders. So again, just to emphasize,